Hello everyone, Andrew Docker here from TNT Group. We're posting this for NakedTrader.com. This is our second installment of the one-on-one between George Cavaligos of MF Global and Brian Zahaco to my left of TNT Group as well. We had a lot happening last week. We had the elections, we had QE2, we had the unemployment numbers come out, and with QE2 we saw the government basically pump in $600 billion worth of money. And then with the unemployment, we saw the rate stay at 9.6, but we also had the non-farm payrolls came out at positive 151,000 compared to estimates of 60,000. So a pretty decent number on that front. With you guys, any thoughts on these numbers between the elections, QE2, unemployment? We're also seeing some auctions coming out here today and the rest of this week. I don't know if you guys want to hit on that also.
Well, the 10-year auction is today. It's $24 billion in all new cash. The Treasury is obviously raising some new funds here. Tomorrow's the 30-year auction, and then tomorrow afternoon the Fed releases their buyback schedule for the next 5 or 6 months. Hopefully they'll give us the whole program. We've tried to look at how much the Treasury is going to be auctioning off over the next 4 to 5 months versus how much the Fed is going to be buying over the next 4 or 5 months. And the numbers look pretty big. Anywhere between 82% and 108% of all Treasury auctions are going to be purchased by the Fed. Now that causes some interesting things to happen over the yield curve and over our whole Treasury market. If the Fed's going to be buying such a large percentage of the new issuance, we're concerned that there might not be enough issuance for everybody else, but the corporates have picked up their issuance a little bit here. It's going to be very interesting. The market was getting hit a little bit today. I think there's some inflation concerns with all the commodities going a lot higher that are keeping pressure on the bond market to a great extent and a little bit on the 10-year. We're all very interested in seeing how much of the projected buybacks are going to be towards the longer end of the curve. Economists are thinking there's going to be very little of the 10-year to 30-year area bought back, so I think inflation concerns are going to be a big factor, and we could be seeing a breakdown in the bond market today. If you guys watch the website carefully here, you've noticed that Tony and I have both spoken about the sort of symmetrical triangle in the bond market. 129.20 to 129.22 is where the trend line off of the recent lows comes in, and that's going to be an important support area. Close below that 129.22 area, which could happen today if we do get a bad 10-year or tomorrow with a bad 30-year auction. It projects a fairly big 7-point move lower down to the 122 handle in the bond market. That's something we really have to focus on right now, I think, and that's going to be a big factor over the next couple days for us.
George, can I ask you, what if they're expected to buy 108%? How does that work if it's what's over 100%?
In that case, they're buying older issues that are out there in portfolios.
Gotcha. Okay.
So the dealers have large portfolios, pension funds, insurance companies have large portfolios of treasuries, as do other central banks. So I was just trying to calculate how much of the new issuance, if they just bought new issuance, they won't just buy new issuance. They will buy certain sectors of the curve on whatever day they schedule it. It'll be a mix of old stuff and new stuff. So trying to figure out how much of that old stuff wants to get sold at these prices is going to be crucial. Some people are speculating that China, who is one of the biggest holders of our debt, may decide to sell some of their debt here.
Gotcha. Let me go first. Elections came out as expected. Pretty much the last time we talked, we said it wasn't going to mean anything. It doesn't really matter. Came out Republican, pretty much what everybody expected. QE came out a little bit better than we expected. We're thinking around that $500 billion. They're talking about $600 billion, but they didn't. The hard thing is they didn't really talk about time duration. Talking about $75 billion a month at 6 months, something around there. So that really didn't throw anybody for a loop either. And then unemployment came out a little bit better than we thought in our eyes, but nothing. The rate didn't move, nothing of great importance. So we had this huge week where everybody expected something big to happen, and it was kind of a dud. It's kind of what the market kind of priced in, and you kind of got that feeling going around from the Fed when you heard the rumors that they're going around talking to dealers. What did they expect? What do we need to do to not shake up the market? So overall, last week, pretty much exactly what we expected. This week, going back to the China thing, China just came out and downgraded the U.S., which they've done before, and you didn't really see a lot of movement off it, but they kind of broke those bonds before that happened. You know what I'm saying? It kind of came out and was like, oh, okay. And then they actually got another second push on the bonds today, lower off of that. On top of that, they came out and raised their yield on the T-bills or whatever.
1-year bills. Yeah.
And now people are expecting that could be the next step to another rate hike, which, again, everything's kind of pointing towards our dollar actually stabilizing and rallying. Right now at TNT Group, we're along the dollar, basically off of these moves. So keep an eye on that. All those things kind of point to a stronger dollar, which is going to get real interesting now if they want to rally metals and commodities with a dollar strength. I think it's going to get real ugly in the equity market. That's my personal opinion. But that's a wrap on everything from last week and what we got going on.
Okay, so we saw all that last week, and like Brian said, nothing major changed too much with all this stuff. But we are seeing some concerns and some talk over Europe now, and we're back to the countries over there, still kind of in a crapshoot over there. Do you guys expect to see anything coming out of that? Do you guys expect to trade anything off of that longer term picture? Are you guys concerned? Anything with that?
Well, the markets certainly are concerned. Yesterday we highlighted the Eurodollar sell-off. Last 3 days in the front month and back month Eurodollars, we've seen quite a bit of concern about LIBOR rates getting pushed higher. I think some of that is people moving out further on the curve towards the 5-year area, which is where the Fed is going to concentrate their buying. But I think also that these LIBOR concerns are starting to pop back up again. I've done some research. I looked back at the last time we saw a crunch in Europe, and that was back in January when the euro currency started selling off from its sort of high 140s, low 150s level. Stocks actually held up for 4 months before they cracked. The Eurodollars had a big yield curve shift where the front month Eurodollars just collapsed because of the heightened demand for short-term dollar deposits. It caused LIBOR rates to tick up. When the back months rallied on a flight to quality thing, it was a very violent move. And I think we need to really be on our toes and watch what's going on in Europe here. Watch the Eurodollar structures right now. The market's come off already quite a bit. My favorite trade is the red D's Eurodollar. We broke close to 20 ticks off the highs from last week, and we made contract highs on Thursday, I believe, at 99.50. And when I got down here, we were trading the low 99.30s, and it looks like it's going to go down quite a bit more here.
I'll say this again. I mentioned in some of my webcasts the hot potato. I think it's important. I'll say it again. I think there's so much going on in the U.S. that everyone kind of threw Europe away and said, okay, we're not going to deal with that right now. We're going to focus on the U.S. and
It just doesn't matter, Andrew. Sorry to interrupt. It just doesn't matter. Do we really care about Ireland? Do we really care about Greece? Do you really care? Everybody's in the same boat. I think now if you got something that came up, Germany, I think then you would have a major concern. But it's there. It's always been there. It never went away. It's just now it's just something new to
But
talk
do you think
about.
the focus could come back on it now?
No, I mean, all they're going to do is kind of just keep bringing it up. It never went away. I mean, the focus, they can talk about it all they want, but when you have the U.S. in a situation where we're at, and you're in a currency war with China, and the words getting thrown back and forth, that's still going to be the number one topic. Nothing's going to change in Ireland and Greece. It's just going to keep coming up, and it's not going to go away. Now China came out and said they're going to buy Portugal's debt and support them. So that's going to be the interesting thing to watch China. I think what they're going to go around is just kind of scoop up everybody that's bad. I mean, they got all this money. What else are they going to do with it? I mean, they're stockpiling everything. Why not go out and, buy over Portugal, buy over these little islands? Why not?
They're not buying our debt anymore.
No. So they got to go somewhere. They got to use this money somewhere. So I think that's more of the interesting story on my side. Obviously, things are bad over there. Nothing's going to get better. That's kind of my feeling.
I think you guys are highlighting something. We had spoken earlier before this about the metals markets and how silver was exploding here. And the world seems to be becoming a bit more of a dangerous place recently, you know, in terms of Europe, and the headlines out of Ireland were pretty bad in terms of, you know, getting any kind of political agreement in terms of their debt. There's some talk of default, bankruptcy there. Kind of similar situation in Greece over the weekend with some elections, some minor local elections. When the weather gets better over there in the spring, things are going to get violent again. I know my ancestry is Greek, and I know my people, and they're not happy because massive entitlements are being taken away, and no promise of good times anywhere in sight. No. It might not happen now. You know, we spoke a little bit earlier when the European debt crisis started last January. It took 4 months before the American stock market sold off on it. We saw a similar situation in the Eurodollars. They started breaking last January. We had that sell-off in the front months. We had the violent curve movement in the Eurodollars. Eventually, those things come home to roost. And I think we're seeing the early signs of it, not just in the Eurodollars, but I think what we're seeing in the metals is this sort of this explosion of this flight to quality stuff. These are interesting times, my guys, and we got to be on our toes.
Right. Lastly here, wrapping up, you guys have any levels, you know, bonds? George was mentioning a key level. Any other products that we tend to watch?
Well, I spoke to you guys earlier about the silver levels. We're in a historic rally there. It was up, $1 and some change this morning. I went back and looked at the last rally of this magnitude back in 1979, 1980, and I ran the fib retracements. The 79% retracement above us is $33.50 for the front month silver, and then the old high is at $41.50. And the way our government or our monetary authorities are managing things, I think we're going to see $41 in silver here and probably even higher highs.
Ryan, anything? Are you seeing any levels, anything?
I think the big thing right now is we got to watch this dollar. If we can get above the 77.50 area, I think it's going to set the trend higher for the dollar, and it's going to break out from its bear trend. Keep an eye on that. I think it's a huge picture. We're trying to push up to it today. We're trying to trade in the 30s. 77.38 I think was the high when I left. So keep an eye on that. We get a daily settle above there. I think it's really going to turn that tide higher, which everything right now in the market is pointing that way except for the metals. But don't track those metals off dollar. I think we're going to need a tide of change. Other big thing in the S&P is 1218 in the orders. Looks like a huge pivot area, huge place to stay above or stay below. You're going to move back below there and a daily settle below there today. I think you can be safe on the short side and risk a stop above new highs, which basically are risking like 5 or 6 handles. I think it's worth a shot. So other than that, those are the only 2 levels we're keeping an eye on right now.
Okay, this is George Cavaligos from MF Global, Andrew Taco from TNT Group, and Brian Taco from TNT Group as well. Make sure to check out our individual webcasts each and every day. And next week we should have another installment of the one-on-ones. Thanks.